You're watching Stockwatch. I'm Simon Brown. Joining me to unpack your stock-related questions today, David Shapiro from Sasfin Securities, Nader from Benguela Global Fund Managers. Be sure to send your question through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter, Business Day TV, using hashtag Stockwatch. Gents, appreciate the time today. I want to go back to yesterday, but first, Grant, let's start with you. The Santam update. I know there's an EPS and a HEPS. I typically focus on the HEPS. That's the more core to it. It looked like a really, really chunky number. I mean, I like short-term insurers because of their ability to reprice risk. Your take on Santam and short-term insurers generally?
Yeah, I think, you know what, you're right. Santam actually came out with a solid update, and they seem to have delivered a reasonably good update for a couple of years in a row now, despite some of the massive, we've seen floods, they had some reinsurance risk in other parts of the world, but they've managed to come through consistently. The margin is actually above its long-term average again. So it's a good little business. It's very well run. And I thought it's solid. I don't like the short-term insurers because of sometimes the volatile earnings, but these guys are consistently doing a good job.
Yeah. David, your take on Santam?
Just because Grant's given them a clean bill of health, you're going to find some big flood coming through, some major insurance-related claim. But I'm with Grant as well. You know, this is a company that has been taken down. I remember, all the issues that we had in Natal and all of these kind of mount up. And yet for the last couple of years, the underwriting, margin has been up. And it's just like one of these hidden gems, just creeping up and up and up all the time. But don't make a noise about it, because as soon as you make a noise and brag, the gods are going to get you. Some thunder shower or something like that.
Okay, we shall refer to it in the future as the stock that will not be named. Question coming through around diversified miners, Glencore, Anglo American, BHP Billiton. Actually, weirdly, a couple of questions about the three of them or two of them. David, have you got a preference between the three? I mean, there are some differences, and let's strip out certainly De Beers from the Anglo part. Do you like any of those three diversifieds?
I've been a Billiton person, but at the moment it's turmoil. No one knows what's coming next. Each morning you wake up and you want to hear what Mr. Trump had said overnight and what new tariffs are going to be in place. And I think the latest round with aluminium, and which affects more South 32 than maybe Billiton, but you're not quite sure whether he's going to change his mind on any kind of metal purchases, metal exports and so on. So it's in a difficult area at the moment. But if we take Trump out the equation, then I think they're poised for a run. They're poised for we haven't done anything for a long time, and we're poised for some kind of bottom. And certainly we know that infrastructure expenditure has to pick up. But I think in the short term, it's so difficult to read where we are.
Grant, your take on the three. I mean, they're the three diversifieds on the JSE. There is South 32, as David mentioned. There, of course, are the sort of I don't want to say lower down the grade, but different commodities. But of the big three, which would be your pick, if any?
So in terms of well-run businesses, it would be Billiton. In terms of portfolio of resources, I actually like Anglos. I like the post-unbundling, reshuffling Anglos. The look of that is most appealing. I like the heavy copper composition in the portfolio. That's the number one metal to be positioned for right now. Billiton is working hard, but they're behind the curve there. And Glencore's got some of those unbelievably good cobalt and copper assets as well. It's a bit heavy. It's got a bit of overweight in the coal, but I think over time they're going to keep pumping cash. And so I think I actually think it is a good time to be looking at these with or without tariffs, because even if you put tariffs on, the ultimate demand consumption will still be there. Things will just have to find a different route to consumption rather than, via whichever. So there'll be short-term noise, but at the end of the day, it's like oil price with Russia and Ukraine. Oil found its way into the system one way or the other. So I think we're due for an improving commodity outlook. I would go Anglos and then maybe Billiton and Glencore. Billiton's a better management team, but Glencore's a good little business too.
Yeah, and I take your point. I mean, and the oil finds its way. The commodities will find their way.
Simon, we've been pushing this for 2 years already.
I know.
True.
But one day
we got our returns. Yeah.
One day
David,
Wayne McCurry will be right.
Even a broken clock is right twice a day. So we could be
Wait
there.
until you get us onto platinum.
We'll ignore platinums if we possibly can. But let's stay with commodities. Grant, let's stay with you. Question coming through from Dale around Pan-African Resources. Stock been selling off. They had the trading update Monday. Results were out earlier today. I think the story there, more than anything perhaps, is they just sold less gold. They do lose their hedge at the end of the month, which is nice because that hedge is what, 2,300 and change.
Yeah, I wouldn't worry about the short-term noise. This business has done really well. They've ramped up production. They've been delivering fantastically. And if you've been a shareholder for the last 2 years, you're still laughing, even with the sell-off. And with gold here, these guys are printing cash. I think the gold miners are not reflecting the gold price. There's a bit of disbelief. There's a bit of catch-up now, but no one believes that gold is where it's going to be. Everyone thinks it's going to normalize $500 lower, but we said that $500 ago. So, I think the gold miners are being undervalued. And I think Pan-African Resources is a good little miner. And, if it has a decent pullback, I think you can start nibbling on that one.
David, we chatted last week around gold. You were agreeing that some gold in the portfolio. Would it be gold or a gold miner?
The problem with gold mines is there's always subject to some kind of issue. As we saw with Pan-African today, the Evander mine issues there, and then you've got electricity issues. You've got a lot of things can go wrong, but when they go right, the gearing's in their favor, and you can make lots of money. So I'm not sure. I'm not sure what the good miners are anymore. I'm so out of it. But what I will say in support is this: the gold market is very strong, and it's not showing any signs. So if you believe in gold, you can either play gold, or if you want the operational gearing, choose a mine. But I'm going to leave that to Grant to select which one.
Grant, which would be your best? I mean, we've got a couple. We've talked on Pan. Pan's a great little operator.
So I think David's right. The cost management has been atrocious in these miners, of all of these gold miners, for the last year and a half. They're not making anywhere near as much money as they should with the gold price where it is. Having said that, Anglo Gold has done the best of the majors, I think. And I think Goldfields, if they get their act together and start sorting out the Solaris Norte, etc., they could start to deliver some proper upside. So I like those two. Play it safe. I'll avoid the DRDs of the world for the marginal side of things. And if I was just buying gold with a 10-year view to sleep at night, I would buy the physical gold. I wouldn't buy the shares. Yeah.
DRD, Durban, Roerderpoort, deep. David, let's come back to you. Let's talk Chinese tech stocks. Up 39, call it 40% year to date. Alibaba having a heck of a February. Would you be adding Chinese tech, Alibaba in particular, to your portfolio?
No, we were all caught offside. I mean, no one saw this coming, and this latest move is with where they're working with Apple to put AI into the phones. Together with Alibaba. I'm still very skeptical about China. We're operating in China, and we don't know Mr. Xi. We don't know what's coming next as well. There's just too much authoritarian control there. UBS is going full out for China now, believes it's very cheap. David Tepper, whoever he is, the fund manager, has been in there all the time believing it's cheap. So I think if you've got the courage, and you believe you've got time on your side, you don't want a quick instantaneous profit, then I think they are looking cheap. But you've got China to contend with. It is a communist country. Remember that.
Yeah, and with respect, they've been cheap for a while. Let's be quite clear. Grant, what's your play on China and China tech in particular?
Yeah, I mean, Alibaba's been a buy every year for the last 5 years, and only now are you making money. But no, I do think there's a price for everything. I think if you can stay in the sectors that are not in the regulatory crosshairs or likely to be, and I think tech has moved past that. They had a lot of noise a couple of years ago. I think they've moved past that. It's a strategic imperative that technology succeeds in China now. So I think government will not interfere. I think they will support the sector. And I like it. We've liked Tencent, we've liked Alibaba, and a couple of smaller names. We stay invested there. I think the value offsets the risk. especially relative to, China's AI moment hasn't even come.
Yeah.
And it's very, very cheap on a relative basis. Country of 1.4 billion people, second biggest economy in the world. People are going to sleep on this one. And I think there's more opportunity here than what we've seen already.
Yeah, look,
I must add one thing just around that. We don't understand the Chinese culture. We're so far away from it. And I was just reading that news report now that the Chinese consumer are switching to 60-second, 1 minute little stories. TikTok came from China.
yeah.
It was their invention, and now they've got a whole new culture of watching these 61-minute kind of videos or whatever they're storyboards and something like this. So it's a crazy different culture, and I mean, tech is incredibly important to their, when I say well-being, to their lifestyles.
Yes,
So somewhere along the line, something's going to happen, but for the meantime, I'm still very wary of who's in control.
I zoomed out in the Alibaba chart. 5 years, you're down 40%. You're up 40 in 6 weeks.
Yeah.
David, let's stay with you. Let's stay offshore. Question coming through around Disney. Like the results, Disney Plus may be a little bit weak. Is it offering value at levels? Disney is one of those stocks. If I go way back to my grandfather's time, it was like one of those bottom drawer, you can't go wrong. Would you be putting Disney in a bottom drawer? Would you be putting it in a portfolio?
No. And not for a reason that they're not trying. They are trying very, very hard. Do you know what astonishes me? I don't know what Grant's family's like, etc. But my young grandchildren do not watch Mickey Mouse or Donald Duck. They've got completely different tastes, which are not Disney. Even Sky. What's her name? Luke Skywalker. All of those. Yeah, they no longer, or Marvel, don't have the appeal anymore. It's for me, it's a bit of a concern that they've got to come up with some new kind of models or brands or something. So from that point of view, when I see my grandkids watching Bluey or whatever, you suddenly realize it's not what it used to be. So I think they've got. I'm surprised at Netflix, but Netflix is going in another direction, kind of streaming odd events and that, which is attracting viewers and increasing their viewership. But I don't know, I'm still skeptical, still a bit nervous about Disney and where they're going to position themselves.
Yeah, and all those new ones you mentioned, I know none. David, not impressed? Your take on Disney?
Yeah, I'm also very average, lukewarm on that one. I think they've made some major strategic mishaps. They've damaged their core franchises, which is Marvel and the Star Wars franchise.
Star Wars, I couldn't think of it.
And they're too dependent on the cash machine of the parks.
Yeah.
So I just don't know where this business grows. I don't think the leadership is there, and Netflix has left them in the dirt in terms of understanding the content required to service your consumers. And of course, YouTube is now the most streamed or the most watched TV. So, I think they've lost their positioning, and it's patchy, and it's depending on the next big hits, the next big movie, which is potluck nowadays. You can only churn out so many Marvel movies. People are tired of the repetitive nature of those things. So no, I don't love it. I don't see it as a strategically well-positioned business.
Yeah, and Netflix just makes their movies so much cheaper. None of the huge, tens, hundreds of millions. ShopRite, Grant, let's stay with you. Question coming through. ShopRite, with a nibble in the 270s, surely must be cheap as it's been for a while. Would ShopRite be on your list?
Yeah, I like ShopRite here. I think they continue to operate tremendously well, and they've got a lot of business momentum. Incredible management team, and really innovative in what they're doing. They're leading in a lot of segments. I think they can sustain that growth and that leadership. So I like ShopRite, and I would be buying some here.
David, some ShopRite for you, a boring grocer?
I love the business. I think they've done incredibly well. And I see them zooming all around our neighborhood here.
Yeah.
They just, you want to knock them off their bikes, these 60-60. But a phenomenal business. My only worry is in the short term, there's been a lot of pressure on the retailers. if you've from the beginning of the year, I think we ran up too much last year. There was just too much optimism. So we're going through a little bit of a short-term correction, just bringing the shares back to what I think are going to be fairly decent value. Let it run, you know what I mean? Let this course run. Don't be too quick to try and find the bottom. But there is a short-term sell-off in retailers at the moment, which is just going to make things a little more attractive down the line. But I like the business very much, and I watch them very carefully. I'm still a Woolworths man. I'm still going to Woolworths first, but I do venture off into ShopRite. I mean, into Checkers here and there.
No, my wife and I, we divide. It's Woolies or Checkers, and it depends what the shopping list has on it. Some things are from Woolies,
Exactly.
but some things at Woolies, you pick that thing up and you look at the price, and like you just put it down very carefully because your bank
I'm
manager's
still a Woolworths chicken man, yeah.
Me too. There's some things you have to go there for.
David, let's stay with you. A question coming through about AB InBev. I hold AB InBev. I saw the Heineken results. Am I holding the wrong beer company?
That's an interesting question because you saw that AB InBev are up quite strongly today, and the reason is that Heineken just blew the lights out with their numbers. Why? They're focusing on premium brands, which AB InBev have got a fair number as well. But it's a non-alcoholic brands that are selling. That was up 10%. Now, for a beer company, that's a massive gain in sales. And what's interesting is that in America, they're forecasting non-alcoholic beer sales 18%, plus 18% per annum for the next 4 years. So, you can't get anybody drunk anymore, unfortunately. It's no longer fun going out. Everybody's drinking either these health drink or now non-alcoholic beers. But it's a big move, and that's where Heineken made, having adjusted their the whole strategy in this direction. So watch that. I don't know how it comes in AB InBev, how big it is, but Carlsberg and AB InBev were up today on the back of the numbers that came out of Heineken.
Yeah. Okay, David, you can take me drinking and pay for my whiskies. I'm always happy for that. Grant, beer stocks. I mean, I got to be honest. Heineken's not a stock I watch. AB InBev, yes, but I don't know if you've got thoughts on beer stocks in general or in specifics.
I don't love the alcohol category at all. I think the times are changing. The youngsters are not drinking the way David used to, and so the demand is I mean, that non-alcoholic beer growth tells you a story, but remember that growth is coming from the current alcoholic drinkers moving to non-alcoholic. You're not getting 18-year-olds starting their drinking experience on zero alcohol beer. So I think Heineken's got a leadership in the alcohol-free drinks, so they're better positioned there than AB InBev. But I think that whole category is going to struggle to grow anything better than low single digits, if at all, for many years to come. And they can't rely on the pricing, the pricing mix continuously. So the premiumization is critical, but I think you're seeing this play out in a lot of other categories like Diageo and some of the other liquor makers. I think it's a space you need to be careful of.
Let's stay with you. Grant, question coming through about Richmond. I was looking to buy it just before it went crazy with that amazing trading update. Should I just bite the bullet and jump? I mean, I wouldn't say it's come back. I suppose we could say it's gone sideways. Grant, do you buy Richmond at around, 3,600?
I don't. I like the business, but I would be patient. Usually you get a chance. It might be 10%, it might be 20%. This is like at the top, and it's a little bit of chasing here. So I would just be a little bit patient on this one. Yeah. Great business as it is.
Yeah, zooming out that chart, it gives you those opportunities. David, Richmond?
I never know when those opportunities are. Whenever they go down, people say, no, it's going to go lower. No, then one day you wake up and it's gone higher. It goes through those cycles, exactly as Grant has said. You go through those waves. But this was a blowout result as well, and it caught everybody by surprise. Yeah. No one expected this to happen in luxury, and what's happened since the beginning of the year, luxury stocks are just on the move. We've got Hermes as well. Do you know that Richmond is now number 2 in terms of market cap on the JSE? BHP, Richmond. Then we go down to the booze company, where I agree with Grant. I'm not a great buyer of those, and cigarette companies as well. but jewelry and watches, yeah. So it's it's shown its worth. It's over 2 trillion now. I think 2.1 trillion rand, etc. But it's a kind of company. I'm a big luxury man. I enjoy luxury, and I mean buying the shares. I don't look no watches, nothing. But I never know the right time to buy Richemont. So,
Okay.
but it's a good business.
Next, go to Nike. David, let's stay with you. Nike, I don't know, whichever way you want to say it is fine by me. Is this a Disney? Is this a stock that once was and isn't again? CEOs who got it wrong. It used to be the brand.
Keep away from it because it is so fickle. It shifts from Nike to Adidas to Puma to something else. And you never call it right. And it's so much depends. It's no longer on the sporting side. It's now the casual side. What do you call it? The fashion side. And you've got no idea. You've got no idea what sells and what doesn't sell. It's a wonderful brand, but I just keep away from it simply because you don't know, from one year to the next, you don't know whether they're caught with too much stock. This sells, this doesn't sell, who knows?
Yeah, or they backed the wrong athlete.
It's lovely brand. I wear them, I run in them, but not going to buy the company.
No, you see, I don't even run, so I don't bother owning any. Grant, Nike?
It's a tough one. And they are still the giant in the room. They still have the most market share by a long way, but that also means there's a lot of these upstarts on Hoka. These guys are taking market share, but we've seen this cycle before where these big boys have been taken out and reset and recovered. So it's possible Nike can come back. I'm a little bit cautious. They've got a new CEO. We want to see his strategy, actually see some implementation, because they've still got a long way to fall if they don't turn the ship around. So I'm a little bit on the fence. I am watching it. It's got a good history. It's a good business. But unless they sort out some of the issues, I think one needs to be a little careful before you jump into this one.
Yeah, and the previous... David?
Go. No. I was just gonna say there was a wonderful advert on the Super Bowl on the brand On, and that's what Grant's saying. New brands come, ON. But there was a Sesame Street character saying, no, challenging and say that's not On. It was Roger Federer because he was wearing it. Says, no, that's On. It's a QC. So he doesn't know his alphabet. It was a beautiful advert in there. But so, no one's ever known. Is it On or is it QC? But
and they've
to the point that a lot of this is what I'm saying. These brands come, Simon.
Yeah.
You know what I mean? And how long is On going to last? At the moment it's very fashionable, but sooner or later something else is going to come. And they're all kind of playing. Yeah.
I never even heard of On, but then I don't run, so maybe that's why. Anyway, let's go to stock picks. Grant, let's start with you. Mondi, we had we had a question around Mondi. Your pick this evening.
So I like Mondi. I think it's been unloved and it's been trading down for over a year now. I think it's easy to forget what a good management team this business has and what a good business it is because of the cyclicality and the attachment to Europe, which has really been struggling for growth. And they've still had a long inventory recovery cycle in Europe post-COVID. But I think we've seen the worst of it. I think we're going to see improvements. The rate cutting cycle, uptick in global growth or European growth will come. And I think Mondi is actually pricing really attractively at these levels. If you're patient, I think you'll capture a nice re-rating and an upswing in the cycle. So a good business with good track record, and I would buy Mondi here.
Yeah, okay. I hadn't had a peek at it in a while. Yeah, sub 300, just below. It did go a little above it. David, you're going with S&P Global. This isn't the index. These are the people who call us junk. And if memory serves,
that's exactly why.
Warren Buffett owns a share in one of them, but I can never remember which.
He owns Moody's.
Moody's.
This is much better than Moody's. There's only two. This is the big moat company. Yes, there's Fitch in there, but if you want to issue debt, you have to get that stamp either from Moody's or S&P. You need sometimes both. And you pay them to do that. Mm-hmm. So you pay them license fees. And, when you use the S&P 500 and you tap on your screen, you're paying S&P Global who issue that, So they also look at data and provide data on that. So it's a licensing company. And as things start to pick up, debt issuances pick up, so they make money. So they had very good numbers out, I think, yesterday as well. But it's if Buffett can buy Moody, rather buy S&P, much better one.
Okay, S&P the better of the Moody's. I'll take your word on that. That's it for Stockwatch today. Thanks to our guest, David Shapiro from Sasfin Securities, going with S&P Global. Nader from Benguela Global Fund Managers, going with Mondi. Moving forward, Stockwatch will be pre-recorded 12:30 on Fridays, so send your questions early. Email stockwatch@bdtv.co.za, SMS 41392, or on Twitter @BusinessDayTV using hashtag Stockwatch. Up next, The Close. Stay watching.